Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London sugar markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ice raw sugar in New York. The observations here is little changed since my last commentary, or the commentary I made 13 weeks ago. I mentioned back then how two significant long-term patterns had been responsible for the market's actions. The first pattern is the breached and now seemingly repaired bright green late September 24 to late February 25 bearish shift pitchfork. The bright green upper time, currently at 1460, had been tested a number of times but had survived the bullish pressures upwards. And the bright green middle time is still some distance below, and it's currently at 1234. The second pattern was and is the older and bigger bright red November 23 to September 24 bearish shift pitchfork. The market approached the upper time, which is currently at 1510, a number of times, most recently in early May. But the bullish incentive was never been strong enough to really test this upper time. The bright red middle time is also some significant distance lower, currently at 1175. A third, longer term feature has also showed up and had been a significant break below, lower as recently as last week and this week, and so we are so far fully below it, making new lows not seen since, well, mid-April. It is the 61.8% 21st century absolute Fibonacci line at 1383. Now this had been support earlier in the year, in February and March, and again as recently as late May, but we seem this week to be starting fully below it, which is an interesting development. Then finally there is the more recent and new pattern, the dark blue late March to early May bearish shift pitchfork. That complements the other bearish patterns already mentioned. Indeed, the dark blue upper time, currently at 1470, is complementary to all the other upper times. But the dark blue middle time below, which is currently at 1341, was being tested yesterday, with the prices a little under it, closing for the first time and approaching the significant low made back in mid-April at 1322. All in all, a similar picture to last time, just importantly lower. Ice Europe white sugar in London. Not the same in London sugar here as in New York sugar, though we do have some patterns, bearish patterns, that have survived and even surprisingly thrived for many months now, and others that are being heavily tested right now. The main important pattern here is still operational and is what I coined back then the most important pattern here on this daily chart, the bright pink September 24 to March 25 bearish shift pitchfork, which has been the showrunner for this market for about a year and a quarter now. It was, as I said 62 weeks ago, and I quote, "Also keep an eye on the bright pink late September 24 to mid-March 25 recently finessed bearish shift pitchfork. This is a very shallow pitchfork, and the more the market moves lower through it, the more I'm beginning to like it." End of quote. We're currently in between the bright pink middle time below, which is currently at 413.10, and the bright pink upper time above, currently at 471.40. A second pattern I mentioned back then has been tested and breached a number of times, and is now just about broken, with prices consistently over it, attempting stabilization indeed, but not quite achieving it yet. It is the bright red January 24 to date downtrend, currently at 436.30. We've been above this bright red downtrend for most of June, but the stabilization over this downtrend has been very delicate and not robust enough as yet to fully label it, to my mind at least, a fully broken downtrend. But there is one caveat to this that might swing it this way, and that was how last week we had a weekly key reversal down in London sugar. Thus, I'm watching with quite some interest to see if prices will follow through with this pattern this week. There is also a newer pattern, one I mentioned 2 weeks ago, of an end of March to start of May dark blue bearish shift pitchfork. The dark blue upper tie above, currently at 445 even, and the dark blue middle tie below, currently 415.80, had acted as a short-term proxy for a bear channel since the start of May. The dark blue upper tie has been tested consistently for the last 3 weeks, breached but not broken, and I continue to wonder how good it remains as a resistance. An additional point is whether the so far unhighlighted mid-February to date uptrend, which is currently at 435.70, whether it is any good or not. This can be regarded as a 3-pointer and may be turning the action since mid-April to date into a possible sideways triangle, along with the February 2020 high of 456.70, or dare I say it, into a not very pretty looking mid-April to date double top. More on this once I see further developments with this weekly key reversal down from last week. There is one final observation, and one I made 2 weeks ago, which is still seemingly valid, and one to also watch for. Prices have seemingly paid very little attention to the green short medium moving average below, which is currently 436.10, or the gold long moving average a little further down, which is currently 431.30. However, the mauve medium moving average at the base of all these three, currently at 428.20, and congestion at 425.5, seems to have the look of a possible significant bullish support, so please bear this in mind. Sugar white premium spread. The market continues to move higher, up and away from the broken July 25 to May 25 downtrend, currently at 413.5, and now through a pair of 50% Fibonacci lines from the July 19 to September 22 move and the August 21 to September 22 move at 128.75 and 131.75 respectively, as well as the June 2020 high at 134.25. As I said back 10 weeks ago, and I quote, "To be honest, none of these three resistances look that great right now," end of quote, and the market has carved a way up through them. And it did this carving with the aid of a new pattern, a February/March to date bullish expanding wedge pattern, which is currently 113.75 to 150 even. Then, as I said 2 weeks ago, and I quote, "Once stabilized beyond these resistances, should that be the case, then we have the September 2025 high at 144.25 and the July 25 high at 151.25 as resistances. But I suspect the next major resistance will be the 2013 high at 152.75. End of quote. Now this all seems to be the case, though the mid-September high at 144, mid-September 25 high at 144.25 and the early July 25 high at 151.25 seem to have eroded the bullish incentive a little. Nevertheless, the bullish incentive is still alive, if somewhat taking a short breather. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.